Hello, this is Colin Cattell, host of Palisade Radio, here to tell you about an amazing event taking place from February 15th until the 19th. Palisade Global Investments is teaming up with the Real Asset Investor team and one of the largest real estate developers on the island of Ambergris Caye, Belize to throw an amazing 4-day event. We're gathering an exclusive group of 25 accredited individuals to network, learn new ideas from experts, all while staying at Ambergris Caye, Belize's newest resort, Mahogany Bay Village by Hilton. The conference is taking place from Wednesday, February 15th until Sunday, February 19th. Indulge in your prosperous future at Ambergris' newest resort for only $997 plus airfare. Accommodations, food, and drinks are included. Only a few spots remain. If you're interested, send me an email at colin@palisadeglobal.com. Welcome back to another episode of Palisade Radio. This is your host, Colin Cattell, and we'll be hosting 25 accredited investors at the brand new Mahogany Bay Resort on February 15th to the 19th in Ambergris Caye, Belize, to talk real estate and hard asset investing. There's going to be a very good focus on uranium, as we have keynote speaker David Cates lined up for attendance. And also in attendance will be our guest for today, Mr. George Glasier. If you're interested in possibly attending, please email me at colin@palisadeglobal.com to find out more information. George, welcome back to the program.
Thanks, Colin. Good to speak with you again.
Well, George, our last interview, which we posted on September 10th, 2016, was aptly named How Low Will Uranium Go? I think we may have an answer now. Uranium seems to have potentially bottomed out around $17 a pound just a few short weeks ago. George, how do you feel about the sector turning? Do you think that a bottom's in at this point?
Well, it's very interesting that the bottom seemed to be reached, and it was and it turned in December, which is somewhat unusual. You know, the buying activity usually is fairly muted at the end of the year. The utilities have, their supplies they need. And so it was kind of unusual to see an upturn before the end of the year. I kind of expected we would see an upturn sometime in 17, maybe the first quarter of 17. But it surprised me that the upturn came when it did, and came with such gusto, so to speak. I mean, it wasn't just a few cents, but, in about a month, it's moved up $3. We see it up. So, I mean, it certainly indicates that we have a real turn, not just 10 cents here and there, but something that has really turned. Now, we'll see if the momentum continues through, 17, the first quarter and the second quarter, but by all indications, it looked like it will, because once prices go up, it's like anything else. That spurs buying activity. People that are sitting on the sideline waiting to buy the commodity, thinking, well, I'm going to buy at the bottom. Once, it's just like stocks, it's hard to hit the bottom, but once it turns up, they all jump in. So that could very well happen, because there, as you know, from all the analysts and all the numbers that come out, there's going to be some shortages of uranium, and there's going to be a lot of contracting, especially in the 18, 19, 20 time frame. So we could see, a lot of contracting or a lot of spot market activity in the next 6 months, which obviously, without the supply to support it, drives the price up.
Percentage-wise, the move in the spot price of uranium sounds quite significant. It's probably 30 to 40% at certain peaks that it reached over the last couple weeks from the bottom. But in terms of dollar amounts, you're talking about a $17 price moving up to $22. It's still well below the cost of anybody being able to produce yellow cake at profit. Certainly, new mines coming into production. What do you see as a necessary price in your head where the uranium price hits that you actually feel that this is sustained and that some real activity is going to happen, some more development and decisions being made for production?
Well, if you just look at the public statements that have been made by a lot of the up-and-coming producers that can produce, that have, good deposits around the world, and I'm talking about in Australia and Africa and various other places, they've announced they need $60 to $70. Paladin is one. They got a great company. They've got an African project that's shut down, and they've announced, they need $60 or $70. They're not going to turn it on. And so what happens is, they're not going to turn it on the expectation of 60 or 70. They're going to wait for that to happen, or when they can get a contract at that level. So, again, that's what other public companies are saying. So I look at what their statements are as to what they think the price is. That's not my company, but that's them. That's the majority of the production won't be turned on. Even the Camecos of this world shut down production and announced they're not going to start it back up until they get higher prices. So I would say we're going to have to see $60 or $70 uranium for a sustained increase of production. I'm not saying we can't get some small increases, lower prices, but the big projects are not going to turn on unless the price is somewhere in that range. That's my thought.
George, you're the CEO of Western Uranium. Western is one of my very favorite proxies to invest in uranium, and we just participated in a financing that recently closed. First of all, you founded Energy Fuels over a decade ago, a company that's still around today and producing. It was one of the darlings of the last uranium bull. I've said this before, but in 2006, that stock went up 45 times with you at the helm and beat every other stock in the Canadian market. Western Uranium is somewhat of a similar concept, except even better in that you guys have been able to start putting together a package of properties in the bottom of a market, whereas Energy Fuels was being done closer to the top of the market. Can you profile for our listeners, without talking about Ablation Technology, just what it is that you've put together in terms of your assets at this point?
Well, we were able to put assets together, of course, in a down and a very soft market this time around. When I put Energy Fuels together, the market was climbing each month, running from about $25 all the way up to I think $138. Well, what happens is the properties became increasingly expensive. We were able to acquire properties, but the price of those properties went up almost every acquisition we made. Well, when we put together Western, the market was pretty flat. It wasn't going up, wasn't going down drastically, and we were able to make our first transaction, at a very, very reasonable price. And then the market, did not react upward, so we acquired additional properties, which we considered, through this Black Range acquisition, and put together about 100 million pounds. And to give you an example, when Energy Fuels was high flying, as you mentioned, back in 2006, we probably didn't have confirmed resources, and these are the 43101 or the JORC resources. We had resources in the ground that hadn't been, developed to the extent we could, turn them into 43101 compliant. But nonetheless, we probably had somewhere around maybe 10 to 15 million pounds, where Western has 100 million pounds. So you can see the difference. Energy Fuels in the beginning days was not a large resource holder. Even though it had a large a market cap, it probably was overvalued when it went up 45 times, as you mentioned. But nonetheless, that was the sentiment of the investors in those days. But this company today, Western, is based on a much larger resource base. And of course, Energy Fuels over the years has increased their resource base, so they've got a very large resource base. And I think I mentioned in one publication that just came out, it took Energy Fuels over 10 years to acquire over 100 million pounds of uranium. It took Western 2 years. And that's not because of me. I'm just simply saying because of the market conditions out there, it took a lot longer for Energy Fuels to do it than I was able to do it with Western.
Well, George, a big component of the Western Uranium story is, of course, what's called Ablation Technology. And anytime that technology is introduced into mining, I think it scares a lot of investors away. There's been many stories in many different sectors of the commodity business where technologies simply don't work out. I spent a lot of time really getting to understand ablation, and it's a simple technology. I'll let you explain it. We've talked about it on the program before. But what I want to start with, and I thought this would be a very interesting comparison, is there's two ways that uranium is currently mined that any uranium investor knows about. There's hard rock, which is simply digging it out of the ground and milling it, and then there's ISR. And I want you to explain ISR, how it came about, and what's different about it. It usually allows for a much cheaper cost of production than hard rock.
Well, I'm not sure it's cheaper production when you totally include all costs through the life of a mine, but certainly upfront capital costs are lower with an ISR project because you don't have to build a full conventional mill. And as you put the well fields in, you've got your development cost is spread over more production. In a typical conventional mine, you've got a lot of development costs before you produce any ore or any mineral. They're simply drilling a hole into the ground, and they're putting in some water with some kind of solution or chemical to basically dissolve the uranium in place. And then they pump it to the surface, and they go through a recovery process of removing that uranium concentrate from the water. And so it's a fairly simple, it was developed over a period of years. It's not new. The oil companies were probably the first to develop this technology clear back in the 70s when the oil companies were all in uranium. Of course, there was Mobil, there was Conoco, and all these guys had some in situ, especially, down in Texas where they had oil interests, and they knew the uranium was there. My understanding is they discovered a lot of this uranium when they logged their oil and gas wells down in Texas. So it wasn't a question of whether uranium was there, it was how to get it out. So they used the technology, related to their drilling expertise. And so the technology was developed over a number of years. Of course, the first and the best way to recover, uranium is dissolving with sulfuric acid. That's how you do it in a conventional mill. And so some of the first projects actually they tried to do it with acid, and it worked quite well. But what happens, it dissolves all of the minerals and all the metals and all the garbage in the ground. And to clean up that water afterwards is almost impossible. And, of course, in the United States today, we cannot use acid in the ground. And so today's, methods are the same, but they don't use acid. As some of the first discoveries or some of the first projects tried it. So some of the projects were fairly successful down in Texas. Some of them weren't. Some of the reclamation costs were quite high because of the cleanup problems down there. But ISR has worked in the United States. Cameco is probably the premier, producer. They've got two projects in the United States. They've been producing for a long time, one in Nebraska, one in Wyoming. So the process does work. I wouldn't say overall it's totally low cost. When you take all the reclamation and all the cleanup, you got to clean up these well fields, and you got to keep moving through these. Your initial cost of production from first well field is fairly low because you're getting a lot of uranium out for the gallons of water you pump through the process. But then you keep pumping the same gallons, and you get progressively less and less uranium. But you can't stop pumping until you flush that well field of all the contaminants. So that's the issue with ISR. If you look at the long term, it's probably, it's not what I'd call a high cost producer, but it's probably not a real low cost producer. Now the exceptions are, of course, and the Kazakhs do the same thing. They put acid in the ground, they don't clean it up. Got to be low cost. But in the United States, and of course most places, Australia and other jurisdictions, you can't do that. You've got to clean up the groundwater.
So, George, you think that you found a cleaner solution in ablation, and Western Uranium's uranium is hosted in sandstone, which is a requirement for ablation technology. Can you go over the basics of the ablation technology and what the benefits are, some of the problems that don't exist that you just explained with traditional or ISR mining?
Right. Well, the other thing, you mentioned new technologies and how they're not readily accepted by the industry. Well, a good example in the oil and gas industry is fracking. Now, who developed fracking? Fracking was developed by some small entrepreneurial oil and gas producers. The big guys stayed out of it. I suppose they didn't think it worked, and they said this isn't going to work. But look at the history of fracking. It was the little guy that said, I'm going to go in, I think it's going to work, and I'm going to develop the technology, and that's what happened in fracking. Well, ablation is, it may be from the uranium industry standpoint, is like fracking was to the oil and gas industry, okay? It's a way to recover substantial amounts of uranium at lower cost, all right? So that's the key with ablation. Ablation is a fairly simple process. I think I've explained it on other of your programs. It's a patented process developed by some scientists in Casper, Wyoming, that basically removes the coating, the mineral coating, in this case it's uranium, the mineral coating from the sand grain. And the secondary mineral deposits, the mineral is deposited, it's a hard coating around the sand grain, all right? So you just can't wash it off with water. And in a conventional uranium mill, or in the in situ situation, as we talked about a minute ago, chemical dissolves that uranium off of the sand grain, and then it puts it into solution, then you remove the mineral from the solution. Well, the ablation process, which is a non-chemical, it's simply a physical process, removes that coating from the sand grain particle and leaves a clean sand. So In the case, if you were looking at some material before we put it in the ablation process, and in the case of most of the ores, it's kind of gray-colored sand, about the size of beach sand, maybe a little larger particles. But you put that into the machine, and when it comes out the other end of the machine, you've got a sand that's like white beach sand. It's clear of that gray coating, which is the mineral, and you've got almost a white beach sand. And then you've got the fines that come out contain the mineral. And it's done with basically the kinetic energy of the particles of sand hitting each other at very, very high velocity. So it's a fairly simple concept, but to develop this, to operate the concept was the key, and that's one of the things. It sounds simple, but to actually do the thing, and we've been the only company to run the commercial machine. So there's some ways, and it's just like any technology, I suppose, with fracking. The first time they tried to frack, they didn't recover as much as they do now, so they improved it by doing it, and so that's what we've done. We've taken the concept and put it into the commercial stage and know how to run the process. And so that's kind of an easy explanation or a short explanation of how ablation works. And the reason it reduces the cost of production, you still have to mine the material, but what happens, you leave a very clean waste at the mine site rather than shipping all that material to a conventional uranium mill. And after you mill uranium ore, you come up with the tailings, which have the toxicity and the problem with the disposal. So you reduce the amount of disposal of toxic, and not highly toxic, but the uranium tailings that you have to dispose of at the mill site. And you just simply leave that at the mine site, and you backfill it into the mine or leave it on the surface of the mine as a clean beach sand. So that's the environmental issues and basically it's a closed system. It takes water, but it takes very little water. It takes very little energy, and it's a closed system. You do not discharge any water from this system. The water is reused over and over and over, and there's a little fresh makeup water, but it doesn't have to be, certainly doesn't have to be quality. It doesn't have to be drinking quality water. You can use mine water or contaminated water, because the water simply is the medium to drive the particles together. So it's a very environmentally friendly process where you take conventional mining, it does have the tailings, and of course in situ, when you're mining that way, you're basically creating the waste, but it's underground, and that's why you continue to try to flush that aquifer to clean out the dissolved, things that you don't want left in the groundwater. So technically, we could probably use ablation for any of the in situ projects. There's a way to do that, and we don't need to discuss that now since we're talking conventional mining. But with the ablation process, theoretically, you could replace in situ mining and still mine those type of deposits.
Western Uranium's asset base is quite strong with 100 million pounds of uranium, and you have the rights to the ablation technology fully owned by Western. And Western also owns the Sunda Mine complex, which is a multi-million pound uranium deposit, several mines on the complex, and it's fully permitted. I should say that makes Western Uranium the first potential to market in the U.S. to turn a mine back on. Can you talk about the plans there, George? What kind of price do you need? What's the timing and the capital cost to get the Sunda back into production?
Well, just to give you a little background, the Sunda Mine was produced as recently as 2010 by Denison Mines. They ran it conventionally. They shipped the ore to the White Mesa Mill south of Landing, Utah. And so they shipped it against contracts, or I don't know if they sold it in the spot market at that time. But if you had a conventional operation of the Sunda Mine, you're probably looking at the same thing. All conventional mines in this area probably need $60 uranium. But with the ablation process, as I just explained, that cost of total production is cut down, not the mining cost, but the amount of material you ship to the mill. Now, for instance, to ship a ton of material, I don't care what it is, from a distance like from the Sunda Mine, let's say, to the White Mesa Mill, it's probably $25 or $30 a ton. To mill that, most of your mill costs are related to the tons you put into the mill, not the number of pounds of uranium you have in the ton, but to the volume you put into the mill. So if we can reduce that volume by up to 80 or 90%, we can reduce the milling cost substantially. So that's the advantage of the ablation. And applying the ablation at the Sunda Mine would allow us to save that much money. So again, you just use some conventional numbers that are available in the industry rather than me telling you exactly what our costs are. The total cost of producing, from these underground mines, the mining cost it doesn't make a difference whether you're mining gold, silver, or uranium. From these small underground dry mines, it's anywhere between, say, $90 and $100 a ton to mine the rock. And then the ablation process itself is very inexpensive, and it only probably has cost about $5 a ton to run it through the ablation process. And then if you go through the reduction of the mass, so you're reducing your transportation cost and your milling cost by a fairly significant number, then instead of requiring a $60 uranium price, we're probably in the range of a $35 to $40 uranium price, all right? And in the case of the Sunda Mine, there's no capital required. It's fully developed. If we use a contractor, and that's what we would do. Denison had a contractor in there. The contractor brings all of his equipment. We don't have to invest in the underground mining equipment. He brings all his equipment. Obviously, he charges you for that in his mining fee, but we don't have capital costs, so we don't have to buy all the equipment up front, hire all the people. We just hire the contractor. And so the capital cost to start the Sunda Mine is a total of $100,000, and about half of that is for the deposit to the utility company to turn the meters on. And the reason we know that is because that's based on 3 months of usage of Denison when they were operating the mine. And the utility company, the meters are now turned off, but they could turn them on tomorrow if I paid them the deposit. So the capital cost of starting the Sunda Mine is insignificant. And so as soon as we reach the level that we think justifies production, and a nice return, obviously, on the asset. We don't want to mine, as somebody said, you don't want to, not a recreational miner. So if we're just trading dollars, we could cover costs at lower than that. But, we need a significant return for our investors on the resource that we're turning from uranium into dollars. And that's the concept is when you get to that point, we turn the mine on, and then we have significant cash flows coming out of that mine. So, where I peg that price, it's certainly below the 60. It's certainly above 20.
The market's still bad. The uranium stocks are starting to move up, and the spot price is clearly in an uptrend. But I think that there's probably quite a bit of opportunity you're still seeing out there. Is there any type of growth potential beyond 100 million pounds, which is quite a substantial amount of resources as is? But are there any other opportunities that are hitting your desk?
Well, obviously, and then the shareholders might ask, and potential investors ask, why get more? Well, why get more if the price is too high is a good question. But if the opportunity is there to acquire good resources, and I'm talking resources that can be produced efficiently at a good economic value, and you don't pay very much for them, this is the time to pick them up, because this is what creates the ultimate value of companies. It's not, especially in these junior resource companies. If you take a look at what happened in the past, it's the resource companies picking up a substantial resource base, and then when the price goes up, moves up, and you're in production, a major company comes along and buys you out at a substantial premium over possibly your share price. And that's because they've got a fairly large resource. And 100 million pounds is a large resource, but it's not, if there's good resources that we can acquire at a very, very reasonable price today, we probably will do that. And there are opportunities. I can't tell you exactly what I'm working on until we announce something publicly, but we are looking at a number of these things. And of course, this is still, a lot of companies are having a lot of trouble getting any cash, and they have properties, and they're turning these properties back into cash by selling them. And this has happened over the last 2 years. You can see that, the transactions that have occurred, and that's continuing. And we're seeing that it's still difficult for some of these resource companies to raise money, even in the market as it starts up. The investors are not flocking back in droves like they were in 2006, throwing money at anything. They're very selective, and they should be, because I see what happened in 2006. Investors threw money at any company that basically had any kind of uranium in their portfolio, and most of these companies, of the junior companies, most of them failed. They never amounted to anything. The shareholders lost virtually everything. Well, so this time around, I think the shareholders are a little bit more selective. And so they're not investing in just everybody. They want a story that they can believe in, and a company that's got the resource and the management experience to bring that resource into, where we can cash flow them. But we are looking at a number of properties, I can tell you that, but I can't tell you exactly what they are yet.
Fantastic. Well, George is one of the most experienced experts in the uranium space, and he'll be in Belize with us from February 15th until the 19th for our very first Palisade Hard Asset Investor Conference. If you do have interest in joining, like I said, please send me an email, colin@palisadeglobal.com. George, in the meantime, for investors interested in asking further questions to you or getting information on Western Uranium, where can they go?
Well, definitely you can go to our website. My contact information is on our website. You can call me or email me anytime. I'm always happy to talk to investors or potential investors, so anytime. But go to our website, Western Uranium website.
Excellent. Thanks so much for coming on, George.
Okay. Thanks, Colin.
Think you understand the junior mining sector, and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip-your-face-off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen? Or are you too stupid?